thing came in, and you got to send this out at this time. And I said, I've had enough of this. I still did loans for friends, but I had a neighbor, Donna, my next door neighbor, most incredible, full of life person. And she was in her probably 80 years old. And I saw her the last few weeks just kind of slumping around. I said, Donna, what's up? She goes, Bob, my son put me in one of these mortgages, and my whole payment I get in my retirement goes into the mortgage, and I'm losing my savings. I said, really? I'm thinking, why would her son do that? But that's not the point. She goes, I heard about a reverse. What do you know? I said, I don't know squat about a reverse. So I studied that to the nth degree. And I studied and studied. So wait a minute, this program's so good. Why do people look at it negatively? And they look at it negatively because someone has had a reverse in the past which wasn't backed by the government, and the bank would take the homes. That is against the law. That's illegal. That is totally wrong. But the people still say, well, you know what? They'll take you home. It happens all the time. When I speak with someone about it, and the advantages, they go, this is too good to be true. I said, it really is. They talk to their friends, and a week later, they go, well, I don't know. I said, bring your friends in. Let's make sure we get the facts out there. And when I speak with these people, their eyes are open. They're just, really? I said, yeah, you don't even need to use it now, but that line of credit is going to grow every month, every year, no matter what happens to real estate values. They said, and I talked to bankers. They go, how can you do this? I don't do what the government does. I just sell the product for them. So anyway, what I have done is I've totally jumped into that because when I help people, it changes their lives. And I like doing positive things, and I love what I do. This is basically it's the easiest program around. You don't need income to qualify. You do not. Your credit's bad, the government will still look at it. I pulled someone out of the NOD, notice of default. She could lose her home. She had nowhere else to go. She didn't know what to do. No one gave her advice. She called the NOD, was going to go to sale in 30 days. I called up FHA, said, look, I got this lady here. They said, well, we could do it, but we've got to put an impound account, which is called the LISA. The impound account, unlike a regular mortgage, isn't month to month. They get an impound like 10 years to 20 years of taxes. That could be a pretty big chunk. She didn't have that much equity. Fortunately, her brother had some cash, gave her that money for the impound. So now she has no payments, no taxes, no insurance. She's living in that house, never have to make a payment. That's how important and good this program is. Now, we don't do it just for people that are really in need. We do it for finance people to look at it and go, wait, I got $1 million equity in my home, and it's not doing anything. I said, boy, that's fact, isn't it? $1 million. Yeah, but if I borrow money, then I'll have a payment. I said, what if you borrowed money, you did have a payment? Not have a payment. I said, yeah, the reverse mortgage, you don't have to make it. You can make a payment. It's like I put it, if you've got $1 million sitting in the bank about 0.5% interest rate, what good is that doing you? Well, no, I wouldn't do that. I said, we're doing the same thing with your house. You get $1 million equity. It's not doing a darn thing. Nothing. Put it to work. And I'll show you how to put it to work with some of our members in here as we go on. So anyway, first thing we limit is a mortgage. And most of the people I deal with, they'll have a mortgage of $100,000 to $200,000. Then it's like a $400,000 or $500,000 mortgage. The payment's still about $3,000 a month. We need to get rid of the mortgage, $3,000 a month. So they have debt of about $1,000 a month. Get rid of that, $4,000 a month. Get them a line of credit, and then they'll likely qualify. So all of a sudden, these people went from a situation. They still have their home. They have $4,000 a month. They don't pay anymore, and they can use this money to further do what they want to do and change their life and really make it work for them. And here's what I said before: this unique line of credit, it actually grows yearly. You can go to the bank and go, give me a line of credit, bank, and I want you to pay me 3% a month on that. They look at you and say, get out of here. Or I say, wait, I just increased my line of credit for about 3% a year. Are you out of your mind? Well, that's what FHA does. That grows up. And I charge when I sit down with people, 10 years from now, your line of, this is what it's going to be 10 years from now. So it's really a neat program. Market fluctuations. Everything goes up and down, the market, real estate and everything. Should the market take a dump, which it's going to happen one of these days. It's just what happens. It'll go back up. But during that time, when that happened about 15 years ago, if y'all had lines of credit, the banks pulled those lines of credit, cut off the lines of credit. You go, this is what I needed the most. Sorry. This will never go away. They will never pull it. If you can have a line of credit for $1 million, your home's only worth $500,000, it doesn't matter. That line of credit still goes, and you can still access the funds. It's not that a good insurance policy to have going into your elder or adult ages. So this is what I took from Mike. Okay, with Mike's presentation last week, I thought it was very nice and easy and simple to do. I thought I'm going to go along with that. So what this client could do is say, wait a minute, so say we got a client that has got $1 million value of the property, owes $200,000. His payments are about 31, that's pretty good, huh? 31.96 a month. And I say, you know what? I'll get rid of that payment there. You're still going to have property taxes and insurance, so I'm going to eliminate about $2,000 a month. But if you want, you could also, I got a friend, Mike Raines over here, that does property. You've ever thought about getting a rental property? Yeah, but it's a pain in the butt. I said, talk to Mike. Let me tell you what would happen with that. So in this example, purchase price $295. He pays $295, pulls it out of the equity in the home here, the line of credit, pays $295. All of a sudden, all he's got on that property is the HOA and property taxes of $592. He's got a monthly income of $1,752 minus 5. That's $1,133. $1,133 a month. So I took this gentleman from paying $3,100 to all of a sudden having a net cash flow of $1,133 and eliminated $31. That's pretty cool. This is what the numbers can do if you look at the program. Most people don't know they can do this. Well, I wouldn't qualify. I can't qualify for this. I don't have the money. There's all the possibilities. We just got to give the knowledge to the people. And I ask you all, when you talk to seniors, they kind of go, I get this equity, I can't do anything. They wait, you know what? Give Bob a call. He'll talk to you, give you some examples. And no pressure, and I'm no pressure at all. I'm just showing ideas. Here you guys. You leave them and say, sometimes they don't call for a week because they go, well, we thought. I said, look, I told you. You guys, I gave you enough. I wanted you to call me if you need anything. So I called for you. They said, well, I'm glad you called. I said, well, feel free to give me a call. That's what I'm here for. So anyway, so in this example, we took the property. We used the money to buy condo. Now let's put this aside here. Say we've still got this example here, and say the resident isn't a real good, the owner of the house isn't a real good health, doesn't want to go to the hospital, doesn't have the cash. Erica comes in and says, I can get you some home care. We don't know how to do it. Well, if I showed you how to do it, would you be interested? We can go set up this line of credit, which would be $500,000 line of credit, and pay off the $200,000, $500,000, pay off the $200,000, they have $300,000 left. $300,000 left. If that doesn't give them some good care for a while, I don't know. But number one thing is they get to stay in their home. And a lot of people do not want to go in the hospital. They don't want to go in a nurse home. Some do, but at least we give some options of what to do. Let's say we don't qualify, we got bills, it doesn't matter, we can still do something. So we can help in that. So what can we do? Raines can go get some rental property, create income. Erica could go and help this person live a little better and with a little more peace of mind. And then bring Jordan this. I don't want property. I don't want, my health is good, but I get some money sitting here. What can I do with it? Get a hold of Jordan. Put that money to work. Again, it's sitting there not doing a damn thing. I'm sure Jordan could come with financial tools that can make that money work. And again, gang, you borrow that money, you don't have to make a payment. So it's nothing but plus, plus, plus. I think that's about, I just want to, everyone to keep your eyes open, awareness, the fact that there's programs out there. For self-employed people, a lot of times their net doesn't show enough to borrow. They don't, they qualify. We can get them a line of credit to support their business, 55 years and older. So there's so many ways to use this tool, especially if someone like self-employed. I know myself, I write everything, and if I went to qualify for loan, they say, no way. But I'm of age, so I get one of those. But anyway, that's my presentation for this morning. Any questions I may have?